So, as I'm sure a lot of you guys might be aware of, there's been an analyst from Morgan Stanley who's come out and put a price target on Tesla stock of $10. And there's been a lot of bears come out recently when it comes to Tesla stock. So what I wanted to do in this video was I wanted to address all of these bears. I wanted to address the guy from Morgan Stanley who put a $10 price target on Tesla stock. And I wanted to address what all of the other bears are saying on Tesla stock. And let's just get straight into it. Okay, the very first thing that I wanted to talk about was we've got this former Tesla bull. I believe he's from Morgan Stanley, the company. And basically, he's put a new price target on the stock. His bottom price target is $10. Yes, I know you guys are going to rip me out. Apparently, I say that word wrong. That's how I say it. Get over it. Okay. So former Tesla bull makes $10 worst case call on China worries. This is what the article says. It says one of Tesla's former biggest supporters on Wall Street said on Tuesday that electric car makers' shares could fall to $10 from nearly $200 now if tensions with China escalate and sap demands for its cars. Well, that's very interesting because his reason for it to falling $10, which I don't know where he got that number from, we'll talk about that soon, but his reason was if tensions with China escalate and sap demand for cars. Now, do you really think that China has so much market share in Tesla that it could destroy the entire market cap of Tesla down to $10? So you think $10 of the stock's price is from the USA and other countries, and you think China miraculously has this massive market share in the value of Tesla. That's just, I don't like, I mean, the reasoning behind that is terrible, basically. I mean, yes, China do play a half decent part in the role of Tesla. They got their gigafactory in Tesla. They've made a decent amount of sales in China. But by no means do I think that they justify a massive market share in terms of Tesla's total market cap. China is worth a decent amount to Tesla, but not a massive amount. At the end of the day, most of the sales are coming from the USA and other countries. China is just one portion of income, of sales, that Tesla rely upon. Let's dig a little bit further deeper into the article. It says that shares of Tesla edged down, heading for their fifth straight session of losses, and bonds weakened after Morgan Stanley analyst Adam Jonas outlined his worst case scenario. Jonas forecasted the shares could be worth $10 to $391 with a price target of $230, a wide range that underscores the confusion and risks about Tesla's future. Now, if I'm honest with you guys, I don't mind him giving that price range. $10, I think he just pulled that number out of a hat or something. But yes, Tesla could crash to a low amount, so that is true. And on the other hand, he said it could be worth $391. I think he pulled that number out of a hat as well. But basically what he's saying, the essence of what he's saying is correct, and I've talked about this before. Tesla is a high risk, high reward stock. You could lose a lot of money, or you could gain a lot of money. You know, Tesla are going through a lot of trouble lately, and they could become bankrupt. That is a possibility. I'm not saying it's a probability. But on the other hand, they've got a lot of opportunities, long-term opportunities that they can grow from. That their vehicles are high in demand. Everyone loves Tesla vehicles. Electric vehicles are slowly or not so slowly getting more adopted throughout the world. They've got a lot of patterns in their favor. They've developed the whole autonomy thing. Anyone who follows this says that they're well ahead in terms of autonomous driving compared to other companies who research it, which could be worth a lot of money, this type of technology. So yes, Tesla stock could crash. Adam Jonas, you are right. Could it crash to $10? Yes, it could. It's a possibility. Could it go up to $391? Yes, it could. It could go even beyond that. So yes, there is truth to what this guy, I've never heard of him before, Adam Jonas, is saying. Even the good old Jim Cramer did comment on what this analyst said. This is what Jim Cramer said on what Adam Jonas said. Cramer calls Morgan Stanley's $10 worst case scenario on Tesla stock really insane. CNBC's Jim Cramer says Morgan Stanley cutting its worst case forecast on Tesla drastically from $97 per share appears to be a gimmick. Yes, Cramer, I agree with you. I agree that they seem to have pulled this $10 out of a hat. Setting a price target of $10 on a $200 stock really is insane. Yeah. I mean, worst case scenario, at the end of the day, it could get to $10. Do I think it should be a price target? I personally don't think it should be a price target. And yeah, Cramer said it appears to be a gimmick. How about $8? How about $12? 10 basically says, I want to get talked about. Let's talk about me. Yes, Jim Cramer, that is exactly right. He made a very, very low estimate because he basically wanted to get talked about. He just thought $10, yes, I'll put this number out there because a lot of people are going to get hyped up over it. They're going to get emotionally charged, and that's exactly what's happened. Everyone's been commenting on this price target set by Adam Jonas. But at the end of the day, yes, Adam Jonas, there is some truth to what you are saying. Tesla stock could crash by a lot. I hate to be deadly honest with you guys. It could crash or it could gain by a whole lot. Let's move on to what some more bear analysts are saying about the company in the comment section of some of my videos. This will be a bit interesting. Alright, let me start with a comment from someone by the name of Will. What does good old Will have to say? Will says, Tesla's equity is worth $0 a share. The model doesn't work. Their gross profits will never sustainably exceed their operating cost plus interest, 5th grade math, and about 45 minutes of work. Will, I think you might be a bit of a genius, mate. Nah, I'm sorry, I don't want to come at this with a negative attitude. But at the end of the day, when companies are looking to grow, when they're still in the early-ish stages of development, yes, what tends to happen is they burn through more cash and that then they end up producing. For example, like Amazon are the first, I don't know when they became profitable, but they took a good amount of time to become profitable. They had to invest money, they had to make capital expenses, and then what happened after a while? They grew their business, they started bringing in a whole lot of cash flow, and now they're one of the most highly valued companies in the world. At the start of a business's life, which Tesla is still at the start of their life, electric vehicles are still very, very new. What often happens is they burn through a lot of cash. And does that mean that they're going to stay at this state forever? No, they've got the potential to grow their business and generate more cash flow. Does this mean that I agree with all of Elon Musk's expenses? Obviously not. I think he should be more conservative. I've been pretty vocal about that. But unfortunately, no. Their model can be sustainable. If it stayed this way forever, obviously not. It's not sustainable. But obviously the whole point of it is to grow and become more profitable. That's what businesses look to do at the start of their business life. Okay, let's move on to another comment. Andrew, he says, this trade is a pain. Yep, it is a bit of a pain lately for me as well. My punt is Tesla is the first of many companies that will be affected by this tug of war between China and the USA. Agreed, next earnings report will be very important. Yes, Andrew, you made some good points. Tesla are getting affected by this whole, whatever you would call it, whatever's happening between the USA and China. And they could get more and more affected. At the end of the day, the Chinese government has the power, and the Chinese government aren't necessarily liking USA companies in China. Tesla, they have their gigafactory in China, and they are making a half-decent amount of sales in China. So yes, this trade war is affecting Tesla, not in the greatest way. And I agree with you. I think the next earnings report by Tesla is vital. What are the sales going to be like? And what is the net income, the net profit, the revenue going to be like? I can't wait for this next earnings report. Okay, this next one, it's a little bit of a funny wee comment. Let me just read it out to you. So, John says, when I said stocks that don't pay dividends are Ponzi schemes, do you believe me now? The only outcome is the company eventually goes out of business without ever paying a dime to its shareholders. Stocks that don't pay dividends are speculation. You put money in, you get money back. That's how investments work. Any stock that doesn't pay a dividend is not an investment, it's a trade. I think I might have lost a couple of brain cells by reading that comment. I'm not going to lie. So, again, I don't want to come at this with a negative attitude, but come on. Any stocks that don't pay dividends is a Ponzi scheme. This guy might be a little bit new to investing, but that is not true. For example, Facebook are generating a good amount of earnings, a good amount of revenue, and just because they're not paying that out, they're using that money to grow, it does not mean that they're a Ponzi scheme, okay? If a company's got assets and they aren't paying out dividends, it does not mean they're a Ponzi scheme. It still means they're a valuable business. I'll give you the best example that I can think of. Berkshire Hathaway has never, ever in their life paid out a dividend. Warren Buffett doesn't believe in it. He believes the best way to use that money is to invest it themselves as a business. If they think it's better to invest it themselves as a business than give it out to the shareholders, then that's fine. If they can grow their business using that money better than what it would be worth to give out to shareholders, that's fine, okay? Obviously, Berkshire Hathaway is not a Ponzi scheme. This is maybe a bit of a troll comment. I have no idea, but obviously, we all know it's not true. Let's move on. Here we go. Mike Daniels. You want an honest opinion? Here goes. Compared to Jeremy's fairy tale corner, yours is a realistic, non-sugar-coated angle on Tesla. No lipstick on the pig. I believe charts are one of Wall Street's ways to say where to get off, and this chart told you literally get off after they failed. $245 option stunts a couple of weeks ago. This stock is broken and there's nowhere to hide. It will remain broken. Don't throw good money after bad. My honest opinion, only a white knight with deep pocket buyouts can save them from chapter 11, but any such good Samaritan will wait single digits before stepping up. Long life and wisdom to live it, young Tesla's Arius. I don't know what that last thing means, but Mike seems to appear to be mainly a trader. He seems to mainly be analyzing the charts. I'm looking at things from a more longer term point of view. I'm looking at things from how Tesla can grow in the future. They've got a bunch of ways that they can grow. Autonomous driving, that their sales are high, electric vehicles are in high demand. But yes, as well as this, they can also crash by a lot. They're not in the best financial state at the moment. So I like to think of things more from a fundamental point of view, long-term point of view, than just purely looking at the charts. But don't get me wrong, I do like to look at the charts as well. Do I think only a white knight with deep pockets buyouts will save Tesla? No. Maybe if it did happen and they paid a lot for it, then it could save Tesla. But that's not obvious. I mean, that's obviously not the only way Tesla can go up in price and make a lot of money. I've told you all the reasons why I can before in my other Tesla video. But yes, I'm going to be honest, I do think the most likely option to happen with the charts in the short term is for it to keep going down, keep following that downward price pattern, keep following that negative news. That's all we've been getting for the last couple of weeks. That's what I think the most likely option thing is in the short term. Okay, I want to race through these next comments a little bit quicker. So Musk said Tesla only has money for 10 months. You should be selling, not buying. So yes, Musk did get that payout of $2 billion or whatever for 10 months. But obviously that is just a short-term point of view. Obviously what they need to do is change things around a bit, become a bit more profitable. It does not mean that the business is only going to last for 10 months. Obviously it just gives them 10 months of cash to build things up a bit and maybe make less capital expenditure and whatnot. Tesla downgraded to $10, not a falling knife, it's a sword. My condolences. Okay, yes, we've already talked about this $10 analyst estimate. He pretty much made up this $10 figure, but yes, it is a potential possibility that Tesla falls to $10 at some point in time. And the other possibility is it goes up by a ton, okay? I've made a lot of content on that. Tesla now is like a lotto ticket for investors. Sure, you can lose, but long term, when Tesla survives, damn, you win big. Well, I wouldn't say it's like a lotto ticket because the lotto ticket is just pure luck. And secondly, a lotto ticket, the chances of winning is extremely, extremely, extremely low. I think the chances of Tesla going up in the long term, I think they've got a really good chance of doing it. So I wouldn't say it's like a lotto ticket, but I do kind of agree with you in the analogy. You could lose it or you could make a lot of money. So I do kind of agree with you in that analogy, Shiraz. It will go way down before it goes up again. Maybe, maybe not. Let's see. I mean, at the moment, it's following the short-term price pattern, the short-term news on the stock and the price pattern. So it is going way down. We don't know when that turnover thing will be. No one knows for sure. Let's see what happens. At least you are young and can recover if you pull your head out. So I don't get why people are saying this. Like, Tesla is a very small portion of my portfolio, high risk, high reward. If I lose everything, it is what it is. If I make a ton of money, I wouldn't be complaining either. It's a very small portion of my portfolio. Most of my portfolio is filled up with value stocks that are generating a lot of cash flow and that in 10 years time are highly likely to be worth a lot more than what they are today. They're stocks where I can go to sleep at night. They're stocks that I know the intrinsic value on. Tesla is just a high risk, high reward portion of my portfolio. And I like to have a couple of stocks in my portfolio that are high risk, high reward, because at the end of the day, you only need one or two of them to make you a ton of money. Even if a couple fail and one or two of them make a lot of money, you can still end up making a lot of money. It's how Peter Lynch made a lot of money himself, a 29% return. He would invest in a lot of these growth type stocks, and he would know that he could lose a lot of money, but he also knew that he just needed 1, 2, or 3 to increase a ton in value, and he would end up making a high return. Does that make sense, guys? Oh, the very last thing that I wanted to talk about in this video was just show you a little bit of what's been going on with Elon Musk and a potential rumor. We don't know if this is true, but an email that he sent out to all employees. As I say, we don't know if this is true yet or not. Let me read it out to you guys. It's quite interesting. So he emailed this to all of his employees. As of yesterday, we had over 50,000 net new orders for this quarter. Based on current trends, we have a good chance of exceeding the record 90,700 deliveries of Q4 last year and making this the highest delivery sales quarter in Tesla history. In order to achieve this, we need sustained output of 1,000 Model 3s per day. Almost all parts of the Model 3 production have exceeded 1,000 units on multiple days. Congratulations. And we've averaged about 900 a day this week. So we're only about 10% away from 7,000 a week. If we rally hard, we can do it. Thanks for your great work, Elon. So I'm going to leave it on a positive note. As I say, we don't know if this email was actually released by Elon Musk, but if it was, whew, you know, that could be very good for Tesla stock. It means that they're doing well in terms of the sales, and whew, maybe it can make a recovery. I'll leave you with a little bit of hope. As I say, we don't know if this was actually Elon Musk's email. It could have just been a troll making this, but it must have been quite a smart troll because he did make this sound a little bit like Elon. And also, guys, if you do want to learn more about building up a portfolio of solid value stocks, as well as having growth stocks, high risk, high reward stocks in your portfolio, and being prepared for a market crash, I've made a course on how to invest in these types of stocks and actually work out the value of stocks. So if you want to look at that and buy into it, it's only $49 at the moment. Anyway, guys, let me know what you think of everyone's comments in the video. That's all I have for today. I'll catch you in the next video.